Joining me now with more is Tally Ledger, Chief Market Strategist at the Wealth Consulting Group. Tally, great to have you on the show this morning. And a lot's changed, really, in the past week. I mean, just a week ago, we were looking at losses of more than 2% on the S&P 500, concerns about the future of Fed Chair Jerome Powell. Fast forward 7 days later, we seem to be in a different place. What does this tell you about where the market might be going from here?
So, look, we made a high conviction call a few weeks ago to buy the dips here in stocks, and we reiterated that view just last week with the observation that we had a 3+ sigma event whereby investor sentiment and positioning got so lopsided, unlike we've seen in I would say since the mid to late 1990s. So that helps us when it comes to the positioning to really get bullish here. All we need is a little bit of good news, and I think it sends the stock market higher.
What is good news to you?
So I think over the weekend there was some talk about these kind of bilateral disagreements and disruptions between China and the US that are unsustainable. And I think we're walking back. Policymakers in the US and China are walking back from the tariffs on either side. And I think that would help ease the pressure here on stocks and continue the rally.
Mm-hmm. What looks attractive then to you at these particular levels?
So I would caution against overstaying your welcome in the defensive sectors here, like healthcare and staples and utilities. Rather, I'd be buying cyclicals at lower prices. That's our view, and we're sticking to it on the reasoning that the higher beta sectors like technology and even consumer discretionary, I know it feels awful. They went down the most, but they could stand to rebound the most here, and it seems to be happening as we speak.
Interesting. So when we think about U.S. And international stocks, obviously we know that trade talks are expected to happen with 18 key countries, as the U.S. has identified. What does that mean for investments in the U.S. versus international stocks for your firm?
So it's a bit of a nuanced view. Tactically, I think you stick with U.S. equities on a rebound in the very near term. That's just a simple reversion to the mean argument. But more strategically, thinking beyond the near term, look, I think the main tailwinds behind international stocks here are you've got a weakening trend in the U.S. currency. That's been a big barrier for 14 years or so. I think that's helping give the international sectors of the global markets a bit of a lift here. And the starting point for the whole conversation is exceptional value abroad. And if we get some improvement on the earnings front there, especially from Europe, I think you've got three great reasons to stick longer term to international equities.
Interesting. And that's mostly developed markets, or do you think emerging markets look attractive at these levels too?
Look, I think emerging markets led by China could be one of the top surprises for 2025. I think it's hard for many investors to get their arms around it, but you've got exceptional value. You've got an economy that could be turning a corner with the help of fiscal and policy support from policymakers in that country.
Mm-hmm. Tally, of course, Wednesday marks the president's 100th day in office. Wednesday, we also get results from major technology companies. Thursday as well. Let's start with the president's 100th day in office. Do you anticipate that that is any sort of signal for the markets beyond perhaps just a milestone?
Well, I mean, I'm really not a political strategist, but I think what investors are really kind of waiting to see is whether the administration is a supporter of trade or if it's really more of a supporter of the industrial manufacturing sector. If these are just negotiations to get us towards a global fair trade zone and lower some of the frictions to trade for the U.S., I think that could be a very good outcome for the U.S., and that could be another source of support and positive surprises for markets.
And anticipation for technology companies, what do you think we might hear from them this week?
Look, I think that the earnings season so far is shaping up to be pretty good. It's decent. I don't think it's a problem. I would expect, a little bit of turbulence around guidance from those companies, but I think the stocks already know about it, especially the semiconductors, and a lot of the bad news that you might hear from some of those companies is probably in the price, and that's why they're easing up here.
Tally Ledger, Chief Market Strategist at the Wealth Consulting Group. Tally, thanks so much.
Cheers.